It's 41 minutes past the hour. News Talk WSB. My friend Steve Ely, CEO of eCredable.com, joins us on the phone. Hey, Steve, welcome to the Ilyce Glink Show. Where's Steve? Steve?
Yes, I'm here.
Hey, oh, there you are. How are you? How are things going?
Things are just fine. Thanks for having me on today, by the way.
It's happy to have you on. So it's interesting. So Tom, you were probably just listening to me talk to Tom. So Tom's son is in California. He's already given a house back to the bank. He's got a second lender chasing him. His credit's shot and will be for a long time. And I wanted to introduce you to the audience because your new company, Ecredible, is for people like Tom's son who have utterly destroyed credit right now, or for people who don't even have credit. And I thought maybe you could give us a little bit of an explanation. And just for full disclosure, everybody, I do sit on an advisory board for Ecredible because I really believe that there's something like 50, 60 million Americans who don't even live in the credit economy. They don't even qualify for a real, like a FICO score. They just don't even have enough credit to qualify, or they have a very thin credit file where it's just not enough information. So, Steve, tell us a little bit about Ecredible and where you see the market today.
Yeah, we're trying to help the people. It is roughly 54 million people out there that they're not part of the mainstream financial system. So they're not part of the credit economy, and they have really no way of proving that they're credit worthy. And I'm not saying that all 54 million of these people are credit worthy, but we know that a large percentage of them are. And so what Ecredible can help them do is basically take the bills that they're paying every month anyway, things like rent and utilities and child care and insurance premiums and payments like that people are making on time, but they're not getting any credit for that because the companies they're making those payments to don't report those payments to the traditional credit bureaus, where most traditional credit is assessed when you go apply for a car loan or a personal loan or a home mortgage or a credit card or whatever the case might be. So we've developed this web-based service that allows the consumer to work with us, and we've verified the payments they make and produce an alternative credit report. We call it an AMP credit report. AMP stands for All My Payments. We give them a rating of A through F, and all consumers understand that an A is a really good grade and an F is a really bad grade. And that allows them to go talk to a creditor person to person and explain that they are indeed a credit-worthy individual and they're worthy of getting the loan or whatever the case might be.
And I should point out that not only do I think this is a really smart idea at exactly the right time, but Dave Ramsey, who everybody heard, who's on our radio station and who did this great show for us, raising money for the Carathon this week, he has come on board to endorse the product as well. He also thinks it's a great idea.
Yeah, we recently had that benefit from Dave. Just this last week, he announced his endorsement of what we're doing. And, it's a very interesting opportunity for Dave's listeners because, Dave tells people how to live life debt-free, how to build financial wealth without going into debt. And as you know, the challenge that presents you is that most of the ways that you demonstrate that you're creditworthy actually require that you be in debt and that you're paying your way out of debt in order to prove that you're a good credit risk. Well, if you've been on Dave's program for 5 years, you've probably ruined your credit score. And so when the time comes around that you want to go buy a new home or whatever the case might be, you're really kind of in an awkward place because while you're probably a really good financial risk for the mortgage company or the bank, your credit score says you're a terrible risk. So what we can do for people like that is basically say, hey, ignore their credit score a little bit. Let's take all the payments we know they're making every month, and none of those are being reported to the traditional credit bureaus. Take that information, get it verified, get it rated, so that very same person can go talk to a mortgage broker or a bank and get a home loan.
I think that's really important, especially now. We've seen so many people fall by the wayside in this great recession, which we're not even out of, I don't think. For most people, I think it still feels like they're deep inside it. And they've struggled, like Tom's son, who has got a 0% loan, took out a second when it looked like his equity was going up to do some fixing up around the house, lost the house. We're 25% back in 2007, before everything crashed. There were people who were late paying on their mortgage, but now 25% more people are late paying on their mortgages. People are late on their debts, paying their credit card debts and their school loans. And this kind of stuff has a real long-lasting impact on credit. Now, you used to work for Equifax. Everybody knows it's one of the three major credit reporting bureaus. Talk a little bit about how when people's credit is so severely damaged, what happens? How do lenders look at that?
Well, if you're dealing with a traditional lender who's going to look at your traditional credit score, and it's more than likely going to be a FICO score, basically, anytime you apply for any credit-related product, a car loan, a home loan, a credit card, if you go buy a smartphone at a phone store, they're going to check your credit to make sure that you're creditworthy. So maybe 3 years ago, everything was going great for you. You had a good job. You were paying all your bills on time, and you were sitting up at a 750 or a 780 FICO score. And now you've had some issues, and you're sitting down at a 680 or 650. Well, when you go apply for that very same loan, one of two things is going to happen. Either they're not going to give you a loan because you don't make their cutoff range of the criteria that they set for loans, or they're going to give you a loan, but at a very much higher rate. So that means that when your FICO score goes down, the rate you pay for that financial product is going to go up. And unfortunately, in the environment that we're in today, those rates have gone up very significantly. So the penalty for having a damaged credit score is pretty severe.
Right, because it's not like you're going to get, like I reported this week, there's somebody in Chicago who got a 30-year fixed-rate mortgage for 3.96% and a 15-year loan at 3.3%. That's not going to be you.
No, very, very unlikely. You would have to have probably about an 800 to get those kind of rates. If you look at the average credit score in the United States today, the last stat that I saw said it was about 696. And what's interesting is a lot of people talk about the fact that that really hasn't deteriorated a lot during the Great Recession. But it sort of has, because in the big scheme of things, so many people have paid out debt and deleveraged themselves, so their credit score has gone up very dramatically. But there's actually just as many people who have gotten in financial trouble, and their credit score has gone down very dramatically. So it's very misleading just to look at that national average and say, oh, everyone's doing fine. Well, not everyone is doing fine. There's probably a good 25% of the population that is completely unscorable, meaning you can't even get a credit score on them when you check the file, and then another 25% of the population where their credit scores have been severely damaged in the last 3 years.
Who's the ideal person? If you've got an 800 credit score, Ecredible is not for you. You're doing just fine.
No, they're not our customer.
Who are you looking for?
So there's two audiences that we think we can help the absolute most. The first is people with no credit files whatsoever. So just in broad terms, that's the 18 to 25-year-old crowd. These are people that have not have had access to credit. Maybe they got out of school and their parent co-signed for a loan for them or whatever, but they're not really earning credit in their name. And so what happens is if you don't have a credit card or you don't have a car loan, or you don't have anything you're making installment payments on that's being reported to a credit bureau, you're not building a credit history. So when you go apply for that car loan and the car dealer, tries to look up your Equifax credit file, for example, they're not going to find anything. It's going to come back and say, we can't find this person in the system. So there's about 25 million people that fit that category who are just really ideally suited for Ecredible, because, again, we can help that person by verifying the bills they're paying every month anyway. And as long as they're paying their bills on time and have a good history of doing that, we can rate them, and now they can use that rating to go talk to a creditor about their credit worthiness.
And who's the other category of possible users of this?
Yeah, so the other category we refer to as the thin file people, which is another 29 million people. And in credit bureau speak, you're a thin file person, meaning you don't have enough information in your credit file for them to calculate a credit score on that information. So what happens is when you apply for that credit card online, for example, the credit card company looks it up, and they get back this thin file message from the credit bureau that says, well, we can't get a score on this person, so that means we can't make a determination of their credit worthiness. So immediately you're going to get kicked out of that system and get a denial situation where they're not going to issue you the credit card or give you the loan or whatever the case might be. So that's probably the second biggest group for us, because, again, we can help those same people who are making routine monthly payments get that information verified and apply for that loan or that credit card.
And then, finally, I should point out, folks, that, when it comes to something like an Ecredible, this is now the law of the land. Federal law has changed, and lenders must consider alternative credit. And that's why there have been several attempts at doing this before, but they failed. And I think they failed because they didn't really have the right technology, and they didn't have the right people who really understood the credit world behind it. But, hopefully, Steve,
Yeah.
This is the right thing. Let me spell it for you folks. It's Ecredable. So Ecredible, Able. Ecredible. I'll put it up on the thinklink.com blog. You can go to ecredible.com, take a look and see what's going on with Steve. Steve will have you back and let everybody know what's going on with that.
Great. Thanks a lot, Ilyce. I appreciate it. It was fun being on your show this morning.
It's fun to have you. Steve Ely is CEO of eCredable.com. We have the latest news, weather, and traffic for in-depth news coverage. Today's Sunday, Atlanta Journal-Constitution has a report on the state budget gaps in teacher pension plans. It's, what is it now? 9 before the hour on AM 750, now 95.5 FM. News Talk, WSB.